Okay traders, let's go over the FTSE from last week and we'll go over what it's telling us for potentially the next week also. So we identified the triangle last week. We were outside of the triangle at the start of the week. For me, that suggested a breakdown. Really, I was looking for the 6,020 levels as a minimum. That was a strong level of support and resistance down here. The market broke down on the 29th. It came down into the 6,060 levels. And then we had the Janet Yellen release, basically the chair of the Federal Reserve. Her speech drove the market back up. Then the next day on the 30th, we had this strong up day. This was actually termed the Yellen rally by Bloomberg. It shows you the importance of news releases. This is why when we have news releases coming out, I'm always paying attention. They're always marked at the start of each day, so I know exactly when they're happening. I avoid trading around them. But this is what we had. We had the Yellen rally on the 30th. The key point for me is even on the back of the euphoria of the chair of the Federal Reserve advising caution when it comes to interest rates, the market still failed at the 6,220 levels, which is exactly where it's been failing over and over and over again. The next day, we broke down. We came all the way back down to 6,075. And then we had non-farm payroll. Non-farm payroll was better than expected. Once again, that has driven the market back up. So the market really is still stuck in our range. Right here. Hasn't gone anywhere. For me, the key points from last week were the Yellen rally failing at the 6,220 levels once again. Really, on the back of very positive news like this, if it's going to break to the upside, this is when you would expect it to happen. We pushed up and we failed. And the next day we came all the way down. Then we had the non-farm payroll, which has driven the market all the way back up again. And we have produced this pin bar right here. So for the next week, for me, I'm just trading it exactly the same. Trading it as the range. I'm more negative bias still until we can break above this level here. Until we get above 6,220, I'm more than happy just to keep my analysis of this market. Really coming down into these levels is what I'd expect. What we're doing as we're being stuck in this range like this, basically we're just building up pressure. The market isn't going anywhere, it's just bouncing along. It's almost like, you know, if you're inflating a balloon and just keep inflating it, inflating it, inflating it, eventually the balloon is going to burst. And we're going to go one way or the other. And when you're looking at it, you just have to take your overall view. It's exactly what we're doing. We came down. Both of these spikes up have been on the back of news. So really next week it depends on if the non-farm payroll numbers, if they are accepted widely as a positive for the markets. You know, we'll see that very quickly at the start of next week, especially, you know, if we gap up and just keep pushing up into Monday. That'll be a very positive sign. But as long as we still keep failing up at 6,220, for me, I'm still looking for the market to come down at least into these 6,020 levels, and potentially much further. This is only until we break above. As long as we're below this level, I'm still happy to take that analysis. But you also have to analyze the market as it's going along, as you know, as each day is developing, and see what the market is telling you.